Hello traders, Gary Wagner here. Approximately 1 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 15th day of June 2021, and this is the Daily Report for Gold and Silver. The Federal Reserve convened this month's FOMC meeting today. It will conclude tomorrow with a statement, a new dot plot, as well as the mandatory press conference by Jerome Powell. It did trigger us to issue a buy signal today. We'll talk about that when we pull up our charts. Also, copper did take a nosedive today on an announcement by China. We'll cover that when we look at some copper charts during the show, which begins now. Now, for the third consecutive day, gold prices have dropped after trading to a high of approximately $1,910, and that would have been on Friday of last week. We have seen the market hit lows, an extreme low yesterday, actually trading to 1844, which is the exact point of the 200-day moving average. Although we had a higher low today, we did have a lower high, and we have the market waiting on the statement and press conference when the FOMC meeting concludes tomorrow. We did send out a special trade alert on gold. We will cover our rationale behind where we put our stop, as well as what we expect to see out of the market this week, as well as the release of the statement. Traders, we are looking at a daily candlestick chart of gold futures, most active contract representing August. Market closed at 1856 today. We did issue a buy signal. At the time the signal went out, gold was trading at $18.6040. It is currently at $18.61 per ounce. The key, as far as I'm concerned, is the low of yesterday, because that came in really precisely at the 200-day moving average. And I felt that that showed us that we had good support in this area. And depending on what comes out of tomorrow's statement press conference, which I really do expect will result in the Fed maintaining their current monetary stance, continuing with 0 to 25 basis point interest rates through 2021, 2022, possibly to 2023. And although they might start talking about tapering, they'll maintain a transparent policy to give the public plenty of notice in advance as to when that tapering will begin. I think that they will say that it is still too early about thinking about beginning the tapering process itself, and will continue to purchase $120 billion worth of assets each month. That being said, if that assumption is correct, we should see gold take off tomorrow to the upside. I would look for it to challenge first 1880 and then break through 1900, possibly by the end of this week, beginning of next. Also, we did put a stop. We put it just below the 50-day moving average, and you can notice that the 50-day moving average continues to move closer to the 200-day. It has already crossed above the 100-day, and so it is the first steps of moving back into full bullish alignment, which would have the longest-term moving average on the bottom, followed by the interim or 100-day, and then the top would be the 50-day moving average. Although we're not quite there yet, we certainly saw the market reverse when we hit this double bottom back at the end of March and moved to highs of 1920. Maintain your current long position, maintain your current stop. Traders, it was copper that took a virtual nosedive in the marketplace today, giving up almost 20 cents, a net decline of 4.22%, putting it at $4.33 per pound. Our stop was effectively hit today, which was sitting at $4.39.6 per pound. The market hit a low of $4.31.5 before recovering at $4.33 per pound. It was announced today by Dow Jones Newswires that copper slide and concerns is really due to the fact that China may curb rising commodity prices. The base metal has come under pressure on reports that China is preparing to release state reserves and adding that this follows recent measures to quell the price of raw materials and surging input costs for manufacturers. The 3-month LME copper contract slipped 2.2%, and other base metals also fell to 3-month lows, with nickel down about 1.7%. We'll talk about where we think copper could go when we pull up our charts. Traders, as I said, I am sorry to report that we were stomped out of our long copper trade today. The announcement made out of China is definitely a fundamental event that no one really saw coming. The last time we saw a major break below the 50-day moving average occurred in the beginning of October of last year, and it actually fell to about the 100-day moving average, this cyan blue line here. We had a couple of occasions where it dipped slightly into it, but nothing with the kind of chart damage that we saw today when we tumbled directly through the 50-day moving average. Therefore, I am still bullish on copper. We'll have to see how it pans out with China's resolve to release copper from their reserves. But tentatively, I'm looking at $4.20 as a possible re-entry point. That matches up with the 100-day moving average. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.